It's time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
Tree Island Steel, TSL on the TSX, currently trading at a price of about $4.07 and has a market cap of $116 million and a dividend yield of about 2.5%. So Tree Island Steel operates in the steel business and is primarily engaged in the manufacturing and sale of steel wire and related products for a range of applications. And looking at the company's recent financial results for Q2 of 2021, there was some good revenue growth. It increased about 47% to $74.4 million compared to the same period last year. And now net income for the quarter also increased substantially from last year to approximately $9.1 million. And adjusted EBITDA grew over 260% to $14.7 million from $4 million for the same period last year. Now, looking at the balance sheet, they have net debt of about $74 million and a net debt to EBITDA multiple of 2.6 times. So getting up there, but not too bad. And a valuation of an EV to EBITDA multiple of 6.6 times, which I would say is reasonable in my opinion and possibly trading near or under fair value. That is, if growth like this can continue. Now, one point that I do want to make here is that revenue really has been kind of flat and sort of lumpy realistically over the past 8 quarters, except for these last 2 quarters where we kind of been seeing the economy open up. So to conclude, Tree Island Steel appears reasonably attractive. Although lumpy, the company has been growing revenue and profitability, has a decent yield, reasonable valuation, and a reasonably healthy balance sheet. But like I said before, what one must keep in mind here is that we have two forces at play. The first is increasing demand from the economy reopening. And the second is the increase in steel prices, which are up over 200% from the same period last year. And this increase in steel prices is essentially what has helped the company increase its profitability margins substantially. Now, generally speaking, if someone thought that the price of steel was going to continue to increase, I think that it could be a decent option to gain exposure to this underlying trade or investment thesis. But long term, there is definitely some uncertainty, such as if steel prices turn and demand for steel begins to slow in the economy, we will see the opposite effect happen with revenue and margins declining and subsequently the stock performing poorly. So realistically, it's a tough call. Fundamentally, the business is performing well as of recent, but some speculative aspects really keep us hesitant from recommending the business to our clients.